Hey guys, I hope everyone is doing well and welcome to this week's show. So thank you for the guys who've popped in and guys who are watching on various other platforms. And even if you catch me after the recording, let's have some fun here. I want to show you something that's quite interesting as we get started. You know, I'm always very careful. I always say I don't trade the news when you have read news announcements. So if you're trading, lower time frame intraday, you always have to be wary of when the red news that pertains to the currencies that you are trading is coming up. As for me, I don't trade red news. I have tried, and I've never really found the formula. But having said that, whenever there's red news, I'm out of the market. If there's a singular announcement, I try and go out of the market 30 minutes before. If there's double red news, I'm out an hour, even more before. Sometimes there's triple red news, then that morning or that afternoon, I just don't get into the market because there's so many forces at play that interrupt or disrupt the flow of information that I see using price action. So yesterday we had red news announcement, and I think there is good instructional opportunity for us because we haven't really spoken about it. I do come back into the market at least 3 candles after the red news, within 3 candles after the red news announcement. And yesterday was a classic in terms of showing you how I trade after the news announcement. So I don't trade before the news announcement. And let me clarify that. If I'm in a trade executed well outside of my parameters of news, so if there's a singular red news well before the 30-minute window, then I've got a choice. I either stay in the market and just see what happens with the news, make sure my stop is at the correct technical position. You don't just place a random stop in the market, or I close the trade completely. And I'm very happy with that, whether I'm in a profit or I'm losing at that particular stage. I'd rather make the decision to exit the trade if I'm not comfortable staying in, because slippage can occur. But once the news is done, then I want to watch. Sometimes I sit and watch and just enjoy the moment. But it's a good time to go grab some coffee, run some errands, just be out or be involved in any other work that you're involved in. If you're doing multiple things like I do, and you trade in based on strategies, you don't have to watch these charts continuously. You kind of come in and see if things have set up, and then you can trade. So yesterday, this candle here, so we're in gold, 5-minute charts. This was our news, red news candle. Okay, so if you'd been watching that, market would have, either gone up first and then come down, or gone down first and then gone up, whatever is done. But that particular candle is the announcement candle. So I always want to know what happened with the announcement candle, because that immediately gives me information. Okay, so in this particular case, at some point, whether it was at the beginning or somewhere during the announcement, the bulls had control of the market. That's decisive control of the market at that point, however long that was. But by the time the candle closed, 5-minute candle closed, the bears were in control and closed near its low. Outside candle closed near its low, broke beneath this prior low. So very strong breakout by the bears at that particular time. So that's the first thing. What has happened with this particular news candle? So bears were in control. Then after that, immediately when I see the range or the length, if you like, of that candle, I want to see the high and the low of it. And I'm very interested to see if there's any pullback. So two things, either there will be a pullback, and with that pullback, I want to see what happens at the 50% pullback, 50% of the breakout range. What happens at that 50% height of the breakout candle? Because I'm interested to see the bears created this strong breakout. So now in this particular case, closed near its low, so bears are in control of the market. So I want to see those bears that are in control of the market, are they able to defend the breakout at the 50% level? Because if they are, that means the bears are strong. So I can start to think about, okay, now let me see by the third candle. Okay, so you got the news candle, by third candle, or thereafter, can I get a setup that is tradable? Okay, if the bears are able to defend the 50% pullback. In this case, by the close of the second candle, the bears had failed. So right there, you got enough information for you to say to yourself, okay, the bears were strong enough to create a breakout, beneath that prior low, etc. But immediately after that, we get a strong reversal. If you just look at the bodies, the full bodies of the candle, it's a 2-bar reversal. So the strength that the bears exhibited was immediately neutralized on the second candle. They failed to defend the 50% pullback. In other words, they allowed the market to go beyond the 50% pullback. So as far as I think and thinking about it, I'm not going to jump into any trade that occurs now. I now need to have a little bit more information. I now need to wait for at least 4, 5, 6 candles, another 30 minutes to actually see who is going to be dominant in this market. Simply because first we had a strong breakout, good for the bears, closing near its low, closing beneath the low of this previous low. Fantastic. By the way, this green horizontal level, I marked the previous days, previous trading days high. So the bears were strong, but the bulls came back, and you could argue there, okay, the bulls are defending the high of the previous day. So when I see that, I'm not jumping in. When I see that bear candle, at that point, I'm not going to jump in, because I don't have enough information to decide who is in control and where do I have higher probability of success, simply because of that failure to control for the bears to prevent the market going beyond the 50% pullback. So it means you got to wait, guys. Don't jump in. Just wait and wait to get more information. Now, remember what you are trading. You are trading the price action immediately after a news breakout, and you've assessed it. You've seen the bears control the market. Now you're looking to go short, and then you get this reversal. And although you get a decent enough bear candle, but don't trade this. Just wait for more information. Now, what I want to show you at this particular point, we're going to go to euro, because the euro versus dollar really gave us a classic setup of when you want to trade after a news breakout that's sets up in the right direction. So we're going to go to that, and I will still come back to show you how else you could then trade gold. So as of now, straight after the news announcement, it was US dollar news, so it affects our gold pair, gold versus the dollar. It also affects euro versus the dollar. So at this point, nothing to do. But we got two markets that we trade. The other one is euro. Now, let's have a look at what happens with euro. Very interesting, very different. So with this assessment of euro, of which we're starting to build up in your mind just rules you need to create for yourself. It's how you trade after the red news. Still the same strategy that we trade, but because you've had red news announcements, there are particular rules that we look at. Okay, so so red news announcements. So, you wouldn't have been in the market 30 minutes before, whatever the case may have been, because now you know we're not to jump into the market. But have a look at this. There is the news candle. Okay, again, strong bear breakout. One bar breakout at some point. Bulls control the market, but the bears were able to reverse the bulls from this high completely, closed beneath this low, closed beneath that other low, and this red horizontal line was the low of the previous day. So, they've broken strongly. They've broken beneath the low here, broken beneath the low here, but every time that the market broke beneath the low of yesterday, the bulls came back. But here now, decisive break beneath the low of yesterday, beneath a prior double bottom, closing on its low. So big tick in terms of strength by the bears. You're not trading news, but you're coming in after the news. So what is the first thing that you do? The first thing that you do immediately that you have a news breakout, if you intend to look for trades after the news, you could go away completely, and come back later, and there's other opportunities which we'll talk about. Say, okay, there's news, I'm going to come back after 30, 40 minutes, I'm going to attend to some other project I'm working on, come in and have a look at it. But if you want to find trades early enough, this is what you do. First thing, look at the candle that is closed. That's the very first thing before you worry about 50% pullback. If we had a big tail here, and this was some kind of a doji or whatever, then don't do anything, because now the big tail indicates confusion. So with a big move, big pullback, you just want to wait for the highs and the lows of that candle to be tested. But now, what we've seen on this candle, closing on its low, bears in control. Then the next thing after observing the candle of the news announcement is put a 50% pullback marking. So, we just use our Fibonacci tool, and now we know how to do that. So I'm just going to plonk it here. So that's it. And you want to watch that 50% pullback level, the high and the low. So that's what I did here. So there is a high of the news candle. There is a low of the news candle. There is a 50% pullback. Okay, so you stick that in as soon as that candle closes, and then you just sit back and wait. You want to see the bears who have created this breakout, are they strong enough to defend the 50% pullback? 50% pullback is one of the key levels in terms of price action trading. That's if you want to watch any level, any pullback level, 50% pullback is one that you have to watch. If you go back and look at all your charts when there is a significant breakout of one candle, one bar, or multiple candles, find out, always look for the 50% pullback and see what happens at the 50% pullback. It's an invisible level until you plot it in, invisible level of support or invisible level of resistance that you have to be aware of. You can't trade without thinking about it, because you're, hey, what's happening here? And things are moving behind you. So there's 50%, and look what happened with the euro. Right at the 50%, the bulls, created a micro double bottom. That's two lows right next to each other, sometimes separated by one candle. Decent enough for the bulls. Now, if the bulls were strong enough, then say, okay, let's see if the bulls are going to give us a follow-through candle above the moving average, and then let's see what happens. But the bear is right at the 50% pullback, which also corresponds to this prior low. So there's a few things happening here that gives you confidence. There is a prior low that we broke beneath. There is a prior low there. So the market came back to the 50% level, which is almost equivalent to that. And the bears defended it. The bears defended the 50% level quite beautifully. Why do I say quite beautifully? You have that previous low, You have that other low here. You have the 10 moving average, that's the thick blue line, which we use to indicate the strength of a bear breakout. So, and you have the 50% pullback. The market came back to all of those factors, which are now, so the market broke through the levels of support. The bears broke through the level of support. Now on the pullback, that has become resistance, and it's become resistance that's pretty solid, that the bears defended. So you have a decent bounce of that. Now that's a trade that you got to take after the news. You put your entry beneath that, and your stop is going to go all the way up here. Okay, that's where your stop goes, beginning of the breakout. If you want to be a little bit more conservative, look for another lower high that could hit. It's not necessary to put it all the way back there, but that's where you would put it, because we've had the breakout, we have the pullback. But that's a trade that you want to take. Now, if you're taking that trade, where are you going to take your profits out of the market? Okay. You got to put the things that we've spoken before together, because it is a breakout. And remember, you always try and take your optimal profits out of the market first. So because it is a breakout, okay, I'm assuming everyone knows how to do it, but I'm going to just plonk it in. So the market is breaking beneath that. Okay, that news candle is breaking out beneath that. That's the extent of the breakout. Okay, so if the bears are strong, the reason we put this measured moves in, if you are a bear and the bears are strong, if you're one of the institutions, or if you're retail traders like us, and you see that, you're going to say the bears are strong. They created this breakout. They've defended the 50% pullback, the 10 EMA, previous lows. So if I'm a bear and I see that, I'm saying at the very least, we want to go and take profits down here, the measured move. Okay. But whenever you have a breakout and a pullback, there's another hidden level of support in this case that you need to put in, which is first leg, pullback, second leg, leg one, leg two, extension, there it is. So there is the first leg. So this the start of your breakout there, that's the first leg, to when it ended. And then there is a pullback, which is the height of the pullback candle. So first leg. Let's take it out for the guys who haven't seen it. So Fibonacci expansion, we've set all of these up before. Okay, so I'm going to mark that height. There's the first leg. And the first leg ended there, because that's where the market starts to pull back. And then you plonk it where our pullback ended. So there's a pullback ending, first leg, pullback, second leg, and you get there. So that's the optimal level where you want to take your profits. You want to take your profits out of the market, take it right there, bank your money. You've waited long enough. You waited all day, maybe didn't take a trade the day before. That's where you're going to take. Remember, 60-40 probability. But when you see things like this, although you work, always work on 60-40. Okay, don't get overconfident. Always work on 60-40. But when all the factors are lining up like this, you have just a little bit more confidence. Okay, I mean, we counted all the factors that are working in your favor here. So put your entry beneath here, stop here, 16, 17 people, whatever the case may be, and you want to take your profits here. So it's just on 1-to-1, or maybe just a little bit less. What's 1-to-1? I mean, if you're risking 1% per trade in the market, and you take that trade and it goes your way, you've made 1% out of one trade. Okay, you've waited, but your execution of the trade, it's within 30 minutes. Is 1% good or bad? I'll let you decide that. If at best you can get 3% on your deposit in one of these international banks for over 12 months, is 1% on one trade in one day good? Even if you only get one of these trades a week, it's worthwhile to wait. But I can tell you with confidence that if you were to analyze your charts, you would find at the very least, guaranteed, one of these trades on a chart in a week. Okay, and that's been exceedingly cautious, because I don't want to, saying, hey, George says you can make 1% per chart per day, but this is it. You will find it. The only thing then is, when does it occur? Is that in your particular trading session? Are you in front of your charts at that moment? And all of those factors come in. But they would have been a good trade. Now, here's the thing, guys. You have to be absolutely disciplined with your strategies. I cannot overemphasize that. The way I'm instructing you and coaching you on trading, it's the rigor of discipline, the trader mindset that you need to have. There is no way around it, because I'm emphasizing that, because once you see this, there's a trade to take. But the same discipline that says you take that trade, the same discipline that says to you on the gold, there is no trade to take. Okay, you can't come back and say, oh, I found a trade on euro, let me just boom jump into gold because it might work. It's gone in the direction, but that's a different setup altogether that you're now trading here. Okay, you're now trading something different compared to what you traded here. So if you follow the rules and the strategy, you make a 1% here, that particular, let's talk about it in chunks of time. So within this 30, 45 minute period, you make a 1% and you make a decision when you get here. Okay, remember, I always say, guys, you always have options. I prefer to manage my trades if I happen to be in the market consistently. If not, best to take your profits and leave it. Then come back end of the day and say, oh, this is what happened while I was busy with something else. If you're able to stay in the market and manage it, that's a different game. But at this stage, you can take your profits, and then you stand to watch and see what might happen. Remember, at some point we said this particular breakout, while our strategy here is complete, but this whole price movement here may turn up to be the first leg of a larger move. Okay, you don't know that when you're taking your profits or when you're looking here, because the market might just reverse. It can happen. So you can't just say, oh, well, this is it, let me leave it in. You have to actually keep watch on what happens. So if you can't take your profits, watch and make decisions. Okay, so what I focused on firstly was trading after red news. In this case, it was a 1 bar breakout. It could be several candles or bars. You got to see when that breakout ends. Is it a confirmed breakout closing on its low, or do we have tails? In which case, don't worry about it. Then what about 50% pullback? And once you have that, decide where you're going to take your profits. Okay. So measured moves, which you did, and then leg one to a second leg measured move. So having completed that, you've taken your money, you've banked it. What comes up next? So in this particular case, that's complete. You can see this is all profit taken. That's what's creating this, because we've reached that level, it's profit taken. A particular strategy is complete, but you got to ask yourself, remember we said whenever the market gets to the moving average, you have to ask yourself a question. What is happening at the moving average? Am I now entering into a trend reversal? Okay, do I have a break of a trend? So that's a trend. Okay, leg one, leg two, on its own, it's a complete trend. Do I have a complete break of this trend? Okay, because if I have, then I've got to start looking for a trend reversal or all the other patterns that we've spoken about. If the market's just reverses almost vertically going up, then I have a V reversal, then I've got to worry about measured move. There's stuff that we've spoken about. But in this case, whatever you've done, taking your profits or you're managing the trade, you're watching what's happening here. You get to the 10 EMA and the bulls failed to put a close above the 10 EMA. You've seen all of this. If you've been away and you've come back, or you've just opened your charts, you knew there was news, I'm not going to trade, I'm going to wait 30 minutes after the news and come and see. You got to see what's happened, assess it, interpret it, see who's controlled the market and where the profits align. In this case, the profits that we want to take out of the market align in favor of the bears. So until we see something different, that's where you want to go. So when you see that, then when you see a bear resumption, there is a bear resumption. Okay, test of the moving average. But before that, this is where we talk about being able to, you've got to train your mind not, or to see both the macro patterns and then to see the micro, bar by bar, candle by candle. What is happening at the moving average? Okay, you got tails being created. There's double bottoms here. You got bull, small, very small bull bodies, but no one is closing above the moving average. You get an inside candle, which is a breakout mode, but the bulls failed to capitalize on that. We have another doji. Then we have a bear candle closing near its low, but it is closing beneath that low. It's closing almost beneath that low, so the bears are strong. Okay, so what you want to do is wait, get a little bit more information. When you see that close, there is a potential trade you can take. Now you have to make a decision. Where are you going to put your stop loss? There is always one technical position. The nearest, there's many technical positions, the nearest technical position. So if you're taking the trade here, you can't put the stop here. The reason is we haven't broken beneath this pattern and had a pullback. So you have to go back all the way to your left, and that's where you put the stop. Okay, so you could put the stop there. That's the correct place. So you're taking that trade, or you wait for confirmation, stop is there, and you're hoping for 1-to-1, which is way down there. You don't get there, but you gotta manage your trade. If you don't take that, because you say, I don't want to take that, there's no reason not to take it because you haven't had a close above the moving average. But if you don't take it, okay, if you don't take it, which is perfectly fine because that's just a pullback to the 10 EMA. Okay, the 20 EMA is still way back in the distance. If you don't take it, you want to wait and see what else you get and you just be a little bit more comfortable, which is fine. More comfortable, less chance of being stopped out, less rewards. You kind of wait to say, oh, okay, there's a follow through, there's a breakout, there's a follow through, there's a pullback. Okay, I can take that trade there. If you take that, in which case now you can put your stop above here. Okay, and do the same thing, measured moves. Okay, let's put it in, George, just put it in. So breakout beneath that, breakout bodies. You can take your profits there. If you want to put the breakout that level, take the profits there or hang around until you see a break above the moving average. There you can. So you could take that trade if you didn't take that. So opportunities. I mean, this really is worthy reward of just waiting patiently. If this occurs in front of you, if there's too much drama with the news, it can be quite dramatic and frightening. Oh my goodness, which way am I going to go? There, bulls, bears. Should I not? And you're watching multiple charts, you're going to the gold, and you're just like, I don't know which way to go. Just let it go. Something will turn up. The market will kind of, settle down, give you information nicely and slowly. I mean, when all this is happening, every 5 minutes, there's information being provided to you. It's not as dramatic as the news breakout. So you can wait. Which is my to use to indicate the strength of a breakout. If the bears who have created all this beautiful stuff are strong, then you just know, listen, you just have to just hang in there and take a trade when the trades come up. So there will be opportunities for you. If you kind of look at it and say, but man, the bears created this, what does it mean? All of this could be one leg of a potential move. So maybe the bears say, okay, The whole move here is part of the news breakout. There is our pullback to the moving average, and we might want to be going for a measured move. Okay, so there is a breakout again. So maybe they may say this whole move here up to there. As you can see, it's a tight move. There is a pullback to the moving average. So if you're a bear, you can say, listen, if the bears want to get to that low, they don't quite get there, but there's still enough room in the market for me to make my profits. Okay. Just put your stop at the correct level. Take the trade when you see the trade. If you've been taking all your profits from up here, that would have been a beautiful day for you, right? 2 to 1, 3 to 1. If you trade 1%, 3%, trade 2%, 6%, close your laptop, close your chart. Don't trade again in the month. Bank your money and just wait. There is never any rush. So that's some classics there. Could also put here just for you to. So I put a measured move, but again, you could say this whole move is a first leg right up to there, and the pullback is to the moving average. So the potential for the bears is to get down there, right? If they don't get there, we kind of go sideways. Oh, they do get there, then, not by end of the day. Okay. But you probably don't want to hold that far. If you do hold it, there's nothing wrong with it. Close above the moving average. What's happening at the moving average? As George always says, nothing is happening about the moving average. Something is happening, but the bulls are not capitalizing. If I had bull candle, follow through, pull back, if I'm holding a trade, then I get out because the bulls are taking charge. But you get a bull close, they don't capitalize. I have a bear candle, bull, bear. So if you're in a trade and you're just managing and you're waiting and you're saying, hang on, I took the trade here, I took another one here, I want to optimize my profits, just watch and keep your trades in. Now, keep that in mind, the beautiful day we had on Europe. Now, if you're on gold, remember the trades after the news did not work as we or did not set up. You don't force it, didn't set up. But now you're saying, okay, I want to see if the bulls will control the market, and if they do, if I get a chance to jump into the market. If the bears are still in control of the market and market starts to go down, I want to jump in. I didn't see anything here, but let me observe. Remember what I said, guys. You just have to wait. This has failed. Okay, so wait. Get more information from the market. The bears created that, but we're not trading it because after the news didn't give us a setup. Waiting to see if the bears are strong enough. Of that, they have to give me a follow through. Okay. Look at this. Nice setup. Bears are strong enough. I've mentioned this many times. If you put your order here and then the market turns, gives you an inside candle, goes up, take the order off because this particular setup hasn't worked. This strategy is not, it's this setup, the strategy works, but the setup hasn't worked. Don't force it. Take the order out, cancel it, wait. Okay, give it a few more minutes. If it sets up again and triggers, boom, jump in. That's the discipline that we're talking about here. So here on Euro, order, decent entry, follow through. Here, order, entry into the market. Here, place your order, entry into the market. Now, gold, you're kind of watching that and you're saying, okay, let me place an order beneath here, and you get triggered. And then all of a sudden you get a bull candle. Now there's a problem there, okay? Number one, you shouldn't have got in because the setup didn't work. But if you got in, for whatever reason, okay? So I'm not condemning, I never will condemn all my traders. I'll tell you, you shouldn't have got in, but you got into the market, we've got to manage it. Now we have to think, don't despair and cry and say, oh my goodness, I shouldn't have. You did. So don't worry about it. Any reason you took it and you triggered in, we got to manage the trade. Stop is in the correct place. Okay, you already say to yourself, oops, that's a problem. But you've put a stop in the market. When you put a stop in the market, it means you've assessed your risk correctly, and you say to yourself, if I get stopped out, I'm fine with it. So there's no need to panic. You can be disappointed and say, man, I shouldn't have got in, okay, but I got in, got triggered, and then it reversed. That's fine, but I got to manage it, right? I have my stop in the market. So no need to panic, no need to do foolish things. Let's wait. If the bulls follow through here and give you a bull candle and another one, closing above here, if you're not stopped out, you got to decide, do I stay in or not? I just leave it. This is a perfect time to go and get a cup of coffee. My decision making, my stop was technical. Maybe I rushed it. It's fine, but my stop is in the correct place. My risk is fine. Go get a cup of coffee and don't worry about it. In this case, anyway, the bears do follow through, but then, there's strong bullish price action. Every time you see a tail, means with a strong bear attempt to close on its low, bulls are back. Off the 10 EMA, tails again, and should have taken that trade, not a trade to take, but if you did, you triggered in and market pulls back. Stop is always here. That's the correct place for the stop. Then you get this bull candle here. This is where you got to go back and ask the question, what happens at the moving average? The question, what is happening at the moving average? Number one, I have a close above the moving average. Remember, if you've taken the trade and your stop is here, now we're deciding how to trade. If you haven't taken the trade, you are waiting for the setup. Okay? If you haven't taken that trade, you're waiting for this, because it hasn't set up yet the way we want. But if you've taken it, you've got to wait. You've got to close above moving average. If I get a follow through, that means the bulls are strong. Follow through candle, then get out of your trade, take the loss. Does not matter. That's part of the game. But you see a bear candle and you say, no, okay, hang on a second. How come the bulls are not strong enough? You see another bull candle, you're still not stopped out. Wait. Do not do anything. Then you see an attempt by the bulls. Remember, always wait for the bar to close. Always wait for the candle to close. At some point, strong bull candle. Okay. And then we get a close near its low. It's closing below its midpoint, which means what? Remember 50% pullback that I've been harping on earlier on when trading the news. 50% pullback is important. 50% level is important on every chart. On every chart, of course, on every candle, with every pattern that we have. So the market is closing below the 50% level. Still a bull body, but the bears are strong. They're strong enough to stop the bulls who broke above here. So the bulls broke above here. It's almost a 50% level. If the bulls were strong, they would have kept the market above here. For I say, oh, hang on, the bulls are taking control. So that's good news for the bears. Now you know that the bulls have tested that high, failed to break up. Let's put it in. But I keep reminding myself just to plonk these things in so that you can see, follow my logic. Okay, so they're testing that, try to break up that, failed. You stop in the technical level, the beginning of the high of the news candle, very important, because that's what we're looking at. We didn't even get there, so try to test that, failed. Now you said, okay, let's wait and see what happens. The bulls are strong. No matter what the bears do, we're going to bounce off the moving average and do something going up. But they failed. Get a bear candle, and we have a bear follow through. Now you're saying, okay, fantastic. Now I get a little bit more information. I'm very happy with that. I have a close beneath the moving average. I have a double top failed break. I have a lower high. So there's the high. There's a double top lower high. Okay, I have a close beneath the moving average. Fantastic. I've waited so long for this trade to materialize. Okay, that was the high of the previous day. So broke beneath that, went beneath, tried to break beneath it again, came back, but now isn't a test of it. But with all of this happiness, you can take the trade right here. Your stop does not go here. That's not the place for the stop. Why? You've got to wait for the markets to move from this this high, break beneath it, pull back. Then that becomes a key technical level. So anything that we take down here, that's where the stop is. As for now, our stop is to go there. So you put your entry there, and I'll show you where to take your take profits. If you had been in this trade, which you kind of, what's happening? Just stay in the trade. Now you can say, oof, okay, we're moving in the direction. I am so grateful. Thank God that the market has moved in my direction. I made that mistake, but I held on. Happy to have been stopped out, but now it's working out fine. Don't teach your kids this particular taking these trades. Teach them to take the correct trades because they don't want them to be stressed out. It just creates stress when you take trades that you ought not to. So that's part of the discipline. Just wait, they will come. I'll show you another trade. There was a beauty 1-to-1 last week. I think it was Thursday, but I'll show you just now. Okay, so you're taking that trade. Now you got to be thinking, if I take that trade, where are the bears likely to take their profits? You always got to ask. You can't just take a trade and then hope that, you make a 100 to 110 that just keeps on going in your direction. It doesn't work like that. It might over the long term, but chances are you're not going to just hold the long term. Okay, so we have a clear trading range there. These measured moves are beauties once you start to use it. Every one of us who has been following this show, you've got to be, if you trade in without putting in these hidden levels of support and resistance, you're missing out opportunities, you're missing out where not to take trades, you're risking a lot more. There's just so many things that you'll be missing out, and you've got to train yourself to put them in. So there you go. So you say, no, there's a trading range. And if the bears break beneath this trading range, you might likely go for a measured move down here. Kind of missed it. Remember, always kind of try and put your take profit a little bit higher. So this is profit taken. The guys could have used line chart. Let's just plonk it in. Okay, I've shown you this before, so you could use a line chart. Line, if you really want to find where is the earliest position, I can take my profits out. Okay, line chart is drawn from closes. So if you want to say, I want to increase my probability of banking my profits early, then use a line chart with your measured moves, because based on close, and the close is very important. So that's where your line chart would be. To say, okay, I'll just bank my profits. Are you taking optimal profits? You're taking the maximum of the optimal profits out. The market tends to move beyond that, but that can help you as well. So leave that there for you. So we have spoken about this at length before. So you could take your profits out here. That's all. Take a profit. Or you could just wait and see and manage it. So here's what's interesting. You could have waited and say, okay, I'm gonna manage my trades like George and wait and see if I can optimize profits. Then you get that reversal and your take profit is down here. It's like, oh man, what's gonna happen? Well, what do you think is gonna happen? Wait, do not do anything. You've got to stop in the market. Let's wait and see what happens what happens at the moving average. Okay, what happens at the moving average? So we wait and see, and kind of, oh man, I had all of this profit that was in my pocket, and I should have taken it out. I should have used the line chart, etc. Don't do any of that stuff. Okay, manage your trades. If you want to use line charts, do so, and take your profits out. If the market goes further, don't complain and say, oh, why did I use line charts? I should have managed a trade. Be decisive. Okay, boom, bank it or manage it. Doesn't matter. So what you now think and say, okay, that's what I was going for, but now I have a breakout, right? 4 or 5 successive bear candles. Let me see what happens at the 10 moving average. If the bears are strong enough, there's going to be a bounce off the 10 moving average. There is a distant enough bounce of the 10 moving average. Place your order here. You may or may not have been triggered into the trade, depending where your -1 or so pips was, minus 10 cents, whatever it is you do on gold. If you triggered, that's fantastic. Your stop is up there. If you're not triggered, don't worry about it. Wait for the next setup. Okay, the next setup is the next candle that bounces off the moving average in this case. So if you're not triggered here, you would have been, there's a distant setup, inside candle, off the moving average, lower high. I mean, this one is what shall we call it? El Clasico. This is a classic one that you should take. Only thing is your stop is going to be up there. Okay. And remember, you're coming off the measured move of this trading range. That's where you want to be looking to take your profits. Okay. Could the market go any further? Yeah, maybe that could be leg 1, probably leg 2. But we've come out of the news. The trading range was created. That's where we're going for. So that's where you want to aim. So you get that particular setup. Market gets down to here, and you can see that you didn't get to your take profits level. Now you start to see all of that. So what's the market doing? This low here is now becoming a key low. Okay, so best place to take profits is out here. If you didn't take your profits out here, you get a close, follow through. You can say, okay, get out of my trades. Bit of a profit here, good profit earlier on. But the point is, no trade here because strategy didn't set up. If you manage to jump in, manage it properly. But if you wait, the setup comes. Setup could have been for the bulls, doesn't matter. But you just wait patiently, we take our money out of the profits, out of the euro and gold. Just these trades, if they happened in your particular session, if you manage them well, this would have been a pretty good day for you. Let me just check something here. Okay, fantastic. So the other thing I want to do, I just want to show you, sure we got enough time. Yeah. On euro, I marked it. Happened last week. It's a good trade. I think I have okay. So the trade occurred in this particular area. Okay, so this is much earlier on in the day. You would have had that low marked out. You would have seen that, and you'd have said, well, if we break beneath here, where are we going to go? And you'd have put your measured move, and no surprise, if we break beneath here, market is creating all of this, potentially test that low. So that will give you confidence. Say, okay, I can take a trade if it sets up in here to get here. We didn't get a decent enough setup with a 2-bar reversal. That's a trade that would have set up. Would have given you less than 1-to-1. Okay. 7, 8 pips. Oh, that's even like a third. Okay. So that's a trade you could have taken. But what I want to show is, if you've seen all of this, whether you've taken that trade or not, and the market gets down here, now there's a lot of information that has been provided for us. So just bear this in mind. I can just give you a little bit more information. Okay. Remember all that in mind that we spoke about. So at this level of support, which was a previous low, we also have the hidden level of support, which is the measured move of breaking beneath that V pattern. That's a trading range. Market is broken beneath that, and it's going to get to that. So there's a key level of support, both visible from the prior low and also hidden. There's other things you could add in. I mean, a 2-bar reversal. You want to see how far it will go. You could add that in as well. just you want more assurance that this is a solid level that you've got. So when the market turns here, you shouldn't be surprised when the market turns here. Question then becomes, where am I going to take my trade? Again, question you've got to ask ourselves. Every time we see a test of the moving average, a reversal that breaks above the moving average or breaks below a moving average, you've got to ask yourself, what is happening at the moving average? Am I getting a breakout and follow through? If I am, then I've got to wait for the pullback, jump into the trade, I know where my technical stop is, and see if I can get my reward out of the market, my profits out of the market. So coming off this level of support, and we're expecting a reversal coming out of here, we get micro double bottom. So there is a bottom. There's two candles. Market goes up, tested 10 EMA, comes back, reverses. So there's a double bottom. There's two candles. There's a double bottom here. So we have a higher low double bottom. For me, it's a micro double bottom. Not enough candles separating them. 6+ candles is good, but still, that's a reversal pattern that's occurred here. But I'm not trading the reversal pattern. Now I've got my setup. I'm happy. I want to see if I can get breakout above the moving average, get a pullback, jump in and trade. So we do get a breakout above the moving average. This bull candle breaking out above that, closing above the 10 moving average. You have a follow through bull candle closing above the 20 EMA. So at this point, I'm happy. Now I'm just going to see, do I get a pullback that is going to that test the moving average with just one candle, because then I want to jump in to the trade. My stop level is already determined for me. There is a technical level for me to put my stop in. Okay, so whatever I do up here, the stop has to be down here. So I get a reversal just above the moving average. Now, here's a problem with this reversal. It's an outside candle. Okay, that's a trading range, tried to break above that, failed, tried to break above, failed. So it's a reversal, it's an outside candle, low probability trade. So instead of a 60-40, maybe it's 50-50. You can take that if you want, because it's still fulfilling the criteria, but the actual entry itself is not decent. Still stop here. Either put your full risk in. If you're trading 1%, put 1% in. If you're a little bit more cautious, then you can put a fraction, but it's a trade you must take. Stop here. There is a trade you take because we're coming off this reversal pattern. Now, if you take that trade, you trigger it and you see all of this. Do not panic. Question is, George, why would you say don't panic? I don't panic because I'm expecting it. I'm expecting something like that to happen. It may not be like this, could be just one candle that's like a doji, because I've bought above an outside candle, although it's breakout, pullback, decent one, etc. I bought above that. So because it's buying above the trading range, my stop is here. I can expect a bit of sideways price action. Don't be surprised. Hold on to it. That's why your stop has to be at the technical level. Even if it comes back and tests this or comes back down here, hold on to the trade. If you didn't take that because you said, hey, I'm not quite comfortable with taking this, let me wait and see. If it goes, it goes. I'm not in it. That's fantastic. I'll wait for something else to materialize. In which case, or if you take that, you wait. If you didn't take it, wait again and see what happens. But you would have seen that, so there is a breakout above that outside candle. When it fails, most breakouts fail. Okay, so it's a breakout above a trend range. You expect it to fail. There will be a bit of a pullback. Let's see who ends up controlling the market. You see this outside candle, the bears are strong, bulls went up, bears came back, we're testing that. Now you got to just wait and see. If the bears are strong, they will put a follow-through candle and another candle, and then give you a pullback, which you can trade off the moving average. But immediately there's a reversal by the bulls. Then you say, okay, fantastic. Now I have another higher low, double bottom. That's a double bottom. That low and that low, not perfect, but it's a double bottom. But it's higher than that. So it's higher low, double bottom. So the bulls are exhibiting strength. It's all still coming off this reversal here. Okay. Then you wait to see what you do. Nice reversal. Put your entry above that. Stop still down here. Okay. You would have been triggered there. Stop down here. That's perfectly fine. If the bears put that candle in another candle, and you get stopped out, that's fantastic. But that's, you can't you can't mind read the market. You've got to trade what you see, and you know that the strategies that you have a 60% chance, 75% chance of success. So we take the trades. So you'd have taken that and held your stop there. If you didn't take that, for whatever reason, you wait again. Okay, there's a back candle, there's an inside candle. Now you're seeing that we are getting higher lows. Okay, but you want more information, and you get another inside candle. Now, this one you have to absolutely take inside. After a higher low double bottom, after this pattern, you must take this particular trade if you didn't take anything else. Okay, and your stop is still down there. By the way, if you had taken that trade, remember, there's our breakout portion first. So you kind of say, okay, if I get a breakout, measured move, that's where I want to go. Pull back, didn't get there. If you're taking that trade, now you got a lot more information. That's where you want to be going. So entry here, remember, you've also got these levels here, visible levels. So all that stuff that you've got. So you won't be surprised when things are. So that you got to take, but the stop still is down here. Okay, take, and at that point, you come out of here. I think I came out about there on that trade. It was a decent one-to-one trade, but that's a classic. That's another classic. Just wait for the trades to show themselves before you and take the trades. So presently, we are just in waiting mode on the day. Okay, so kind of waiting to see what happens on the day. On euro, on gold, if you didn't take one of these trades earlier on, now you got to wait to see. But this don't forget about the green. Remember that I'd set it up for our previous analysis we're looking at. But you got to wait and see whether we're going to break out of here, pull back, go, break out, pull back. All right, guys, I hope you enjoyed the show, and especially the fact that you can make money trading after the news. And if you just follow your strategies, there is good money to be made in the market. Excellent, guys. We shall see you next week. Thank you, guys, in the office. Sincerely appreciate it.